Hi there, welcome to Kneppy Invest. The company I'll be featuring in this video today reminds me of my time in Oklahoma. I spent 4 years in that wonderful state. There is a bit of a rivalry between Oklahoma and Texas, particularly when you talk about college football, two big football programs there. And the river that separates Oklahoma and Texas is called the Red River. So therefore, the rivalry between the two schools and the two states is actually called the Red River Rivalry. Hence why every time I look at this company or read about them, I am reminded of my time in Oklahoma. Now in this video, we're going to look at Red River Resources, June Quarter Appendix 5B. That is the inspiration behind me doing this video. But since I started doing this series of companies that were or have achieved an operational cash flow positive June quarter, Red River Resources have released their financial year 21 results. So we're going to touch upon that as well. And as I look upon their financial year 21 results, I have to question whether this company is dirt cheap right now. Before we have a look at their results, let's have a look at some facts in regards to this company. Since I am doing this video, and the whole inspiration of this video is on companies who are operational cash flow positive in the most recent quarter, for a miner, that means more than likely this company has mines in operation. And that is definitely true for Red River Resources. I'm not sure why I'm having a hard time saying this company's name. They have two mines in production, Thalanga, that's near Charters Towers, copper, lead, zinc, silver, and gold. They bought Thalanga in 2014. It was a distressed asset, if I remember correctly, because the company they bought it from went into administration. Always good to buy distressed assets because you might be able to buy them for cheap. In 2019, they bought Hillgrove Project, gold and antimony. That was near Armidale, and that's recently gone into production. So two mines in production. Hillgrove is not quite profitable yet, but Thalanga is definitely profitable. And they also have a project called the Herberton Project, which of course is near Herberton. That's silver, indium, copper, lead, and zinc. I don't know much about indium at all. So two mines in production and one project. So let's have a look at some facts in regards to this company, when they were founded, who the managing director is, and the market cap of this company. Red River Resources was founded in 2002 and listed on the ASX in 2005. And between when they listed and when they bought Thalanga in 2014, this company wasn't going anywhere. In fact, the market cap just before they bought this company-changing acquisition was around 1 or 2 million. And that compare that to right now, the market cap is 85 million at 17 cents. Always like to see if any of the director, CEO, board have any skin in the game or they have a significant shareholding. Mel Palencian has 0.4%. He's the managing director, and non-executive director Mark Hanlon has 1%. So not a lot of skin in the game, but they have a little bit. Also, I'd like to have a look at the fund managers to see if there's any interesting fund managers who are interested in this company. Last year, the top shareholder was Meridian Capital, based out of Hong Kong, something like 23% ownership. When you look at the annual report this year, they're not mentioned, but HSBC custody nominees is, so maybe that is Meridian Capital. They just maybe transferred the holding to HSBC. And second on the list is a fund called Third Wave Investors with 4.25%. I have never really heard of that fund manager before. T code of Red River Resources is RVR. Now on to the financial year 21 results for Red River Resources. And a lot of this looks very impressive. Lots of big green arrows, lots of increases in these metrics. And when you look at the valuation, PE ratio and enterprise value to operating cash flow, those two metrics are quite low. So either the market is totally misreading the story of Red River Resources, or it's not convinced this company can maintain these sort of numbers over the next few years. We're going to have to wait a few years to see if the market is wrong or it's just totally missing the story of Red River Resources. Revenue for financial year 21, 120 million, up 121%. from last year, which was 54 million. Operating cash flow positive for this year, 45 million. Last year, actually operational cash flow negative by 8.6 million. So they've really turned things around over the past 12 months. Capital expenditure, not that high, only 5.1 million. A net profit after tax, that's underlying 21 million, which is again up from a negative number last year, which was negative 4.9 million. PE ratio of 4 and enterprise value to operating cash flow of 1.5. So again, the question I have, is the market completely missing this story, or is the market right in potentially thinking that Red River Resources can't continue these numbers over the next few years? Because if they can, this is ridiculously cheap right now. There could be another factor at play here as well, because more than likely they're going to have to pay a royalty to TCM, which was, I think when they acquired Thalenga, there was an agreed rate or royalty they had to pay to TCM, and for some reason, I can't remember why, TCM decided they didn't want any royalties for some reason, and then they took action against Red River. It looks like at most it's going to be 20 million, but more than likely the royalty that Red River Resources will have to pay will be between 15 and 20 million, and then that will be it. We'll have to wait for the judgment on that. If the market is pricing in a bit of a discount because of that, I think they are again missing the story, because this will be a one-off, and if they can continue these numbers moving forward, that would seem pretty ridiculous to hang this or hold this against Red River Resources. I also like to look at quarter-on-quarter results from a company to see how they are progressing, whether it's just a one-off, maybe they had a really good quarter and a really bad quarter. So let's have a look at the March and June quarter results for Red River Resource, focusing on receipts from customers and where the company's operational cash flow positive in both quarters. Receipts to customers in the March quarter, 26.2 million. Now this was a little bit lower than the October quarter from last year. That was an absolutely stellar quarter, and when we look at the cash receipts history, you're able to see that. And I think the market did get really excited about Red River Resources when they did release their October results. And then the January-March results probably disappointed the market a little bit because it wasn't quite to the standards of the October results. And that could be a reason why the share price has come down a fair bit. They still were operational cash flow positive for the March quarter by $4.1 million, and they maintained the cash in the business, actually increased it by $300,000, even though they spent $2.7 million on capital expenditure, $660,000 on exploration, and they paid down their debt by $440,000. Now let's have a look at the June quarter results to see if business has improved for Red River Resources. It does look like business has slightly improved for Red River Resources from the March to June quarter. Receipts to customers up to 30.8 million. Some interesting changes in the costs or payments for production actually did go up by 6,000. However, development came down by 3,000. Staff costs and sales realization expenses remained neutral. But because receipts and customers did rise by 4 million and costs did rise generally, but overall receipts rose quicker than the costs. So Red River Resources was more highly operational cash flow positive for the quarter, and that was to the tune of 5.7 million. In this quarter, they actually increased their cash on hand by a little bit more than the previous quarter because they didn't spend as much money on capital expenditure, only 880,000. They also spent 810,000 on exploration, and they paid down more debt, 440,000. If I remember correctly, they might be debt-free right now. And they did finish the quarter or the year with $19.1 million of cash. So even if this royalty thing issue is resolved and Red River Resources have to pay $20 million, they have enough cash to do that. And they are operational cash flow positive. So the cash in the business more than likely will increase if they can maintain the production levels we have experienced or they have experienced over the past year and commodity prices stay elevated. I always like to look at the receipts and operational cash flow history for a company. And for Red River Resources, we're going back to the December quarter 2017. Now, what I like to see generally is an upwards trend in receipts. That's the first thing I look for. And hopefully, if we do see that upwards trend in receipts and they can maintain the cost and show some operating leverage, operating cash flow should rise as well through time. And even though there is a bit of lumpiness here, we do see receipts at times go down a fair bit. Generally, receipts are going up. There was a bit of down period towards the end of 2019, start of 2020. That's when Red River Resources was transitioning from one mine to another. That's why we saw a bit of a lull in activity around about the December quarter 2019, lasting into the June quarter 2020. But we already mentioned the September quarter or the October quarter 2020 was quite good, and you can see how that coincides when the share price was rising. And the last 3 quarters weren't quite as good as that September quarter. So maybe that's why there's a bit of pessimism in the market, because they saw that really good quarter and they haven't been able to replicate that in the last 3 quarters. But in saying that, they have been operational cash flow positive for 4 quarters in a row. And you can see if you go past or go during the last 3 years, Red River Resources haven't been operational cash flow positive on a consistent basis until the last 4 quarters. So there is that potential that this company has turned things around, because if they can maintain being operational cash flow positive, maintain this increase in receipts, or general increase in receipts, I would say market cap of in the 80 million range, and PE ratio of 4, EV operational cash flow less than 2. There is a lots of value right here with this company. Onto the weekly chart for Red River Resources, going back to when they acquired that mine at Thalanga, that's 2014, and just prior to that, the share price was really struggling at 1 cent. They probably did a pretty big capital raising to acquire that mine, but the market got excited. The market sometimes gets really excited when companies do acquire a mine, and that definitely happened with Red River. Share price went from 1 cent to 28.5 cents over a 3 to 4 month period, but it has been quite volatile over the past 6 years. No uptrend at all. If you can time your buying and selling with this company, buy near the low or buy anytime it gets below 10 cents, and then sell anytime it gets above about 25 to 30 cents. Right now, share price is around 17 cents. Has been falling for the last 3, actually about 8 months now, because it got to a top, or share price got to a top of around 30 cents at the start of this year. That's after a really nice run from that down period, the low that we saw during the COVID-19 financial panic, when the share price got to about 4 cents. We can see a massive drop in the share price from the peak in 2018, start of 2018, when it got to just above 40. So it fell from 40 cents all the way down to 4 cents. And you remember, the cash receipts was going down at that point in time because they were transitioning to a new mine. And then when that cash receipts rose in the September quarter 2020, that would have been released in October. That's when we were seeing the share price rise quite quickly. And the sentiment changed when they released their January quarter, and it wasn't quite as good as the September quarter. So a lot of shifts in sentiment with this company based off their quarterly results. But there are some, I'll say there is some promising signs based off the last 4 quarters being operational cash flow positive. If the share price can fall further from here, I'll become even more interested. I'm still interested in this company. I have been shareholder of Red River Resources in the past. I did sell out because the share price has started to move into this short to medium term downtrend. I will be looking to take a position potentially, particularly if we start to see the share price turn around and more volume come in, and they have another stellar quarter like they did have last year in September. If you like this video series of me covering all these companies that achieved an operational cash flow positive June quarter, look out for videos on these 4 companies in the next week: High Pages, Clinuvel, and 2 resource stocks, New Century Resources and Karoon Energy. That's all I have for this financial year 21 and June quarter results video for Red River Resources. If you do have any questions about this company or thoughts, I'd love to hear them, because I am awfully close to taking a position in this company. And if you could sway me either way, I'd love that. So I look forward to hearing your opinion on this company. If you have no opinions on this company, or you do have opinions on other companies on the ASX, I'd love to hear your opinions on those companies or thoughts as well. Last thing I should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.